Hi, my name is Angela Muzzin and I'm the Director of Us1 Financial Group. Us1 is a private practice of AMP, and we like to think that we're a little bit different from the average financial planning firm in that we hope to be able to bring Middle Australia the services of financial planners, those Australians that as a whole don't tend to use financial planning services. And the reason for that is usually because perhaps they find it a little bit complex or convoluted. We'd like to be able to simplify that for you with regular programs such as this, and we'll introduce guest speakers on a regular basis, and that way I guess we're going to try and demystify the whole finance puzzle. If you look at legislation or government initiatives at the moment, they're all a little bit convoluted, and sometimes it's even difficult for us to understand what it's all about. So I guess what we're going to try and do is to bring to you the simplest version so that every single Australian can start to take an active approach to either managing their superannuation or their investments, or perhaps the purchase of property. For our first episode, we'd like to welcome the CEO of the Mortgage and Finance Association of Australia, Mr. Phil Naylor. Phil works tirelessly with government bodies and also the big corporations to help be able to bring you, the consumer, better options and better protection, I guess, if you like, from financial decisions. So we welcome him today, and this is the first of a series of many different interviews that we'll have, which hopefully will entice you all to take action and take little or big steps to improve your financial future. Welcome, Phil. And thank you very much for taking the time out to speak to us today. We really appreciate it. As you know, our aim is to get a message across to our consumers, perhaps just to encourage them to understand that the finance industry isn't quite as complex as it seems. So we'd like maybe for you to start explaining to our consumers what's the difference between, or perhaps why did the MFAA start, and what was the purpose of the Finance Association?
Well, the MFAA, or the Mortgage and Finance Association of Australia, started back in the early 80s, and it was originally a non-bank lenders association set up to have an alternative to lending from the banks. And over the years it's morphed into an association of mortgage and finance brokers who provide advice and a range of products to consumers to deal with mortgages and other finance products.
So, Phil, what's the difference then, I guess, between the MFAA? I mean, I have a lot of clients who say to me, should I just go to my bank to get a loan, or should I go to an MFAA broker? What do you think? What's the difference there?
Well, the essential difference is that brokers have a range of products on their panel. So if I'm a consumer and I go to a broker will sit down with me and find out all my circumstances, what I want, what my lifestyle is, what my finances are, and then we'll produce a whole range of different products and different lenders across the whole range of lenders operating in Australia. And then out of that, we'll select with you as the consumer the one that's most appropriate for your needs. And if you go to a bank branch, obviously you go to bank branch A, that bank branch will only sell you the products that they have.
So you're saying it's choice, really? So a broker would give multiple choices to a consumer?
Well, two things. It gives a choice so that, I mean, most consumers don't have time to research through the hundreds and hundreds of products that all the banks have and then looking at each different bank. I mean, if you've got the luxury of doing that, well, good luck, but most people don't. Most busy people don't have that. So the broker provides that service, does all the research for you, presents the alternatives to you, and then you make a selection, and then once that selection is made, the loan application goes to that particular lender, and hopefully you get the loan approved, and then the broker stays with you. The broker, it's not just sell and forget, it's we stay with you. If you want to refinance in 3 or 4 years' time, the broker will then be part of your relationship, and they can continue to help you through your different circumstances as your life changes.
Tell me, Phil, do you think that a lot of brokers support a client? And pardon me, you just made mention now that, you know, a broker will stay with you through the life of the loan. Do they actually help you with working the loan smarter or paying it down quicker or other objectives, or do they just set the loan and forget about it? Do they have other skills?
Well, a key value that the broker adds to the whole transaction is that it's not just a transaction, it's advice. It's giving you advice about, firstly, the range of products that are available, but also saying to you, well, look, this product that I'm going to recommend to you is good for you now in your current circumstances. In 5 years' time, when maybe you have a child, or the family's changed in some way, something's different, your circumstances will change, and the loan that I negotiated for you in 2011 may not be the right loan for you in 2015. So I will sit down with you again and say, okay, your circumstances have changed. Let's see what's out there that's most appropriate for your circumstances now, and then go back to the original lender and see if you can renegotiate a loan. Or if they don't have the products that are appropriate, we then look at another lender and see whether another lender can satisfy the requirements that you have.
It's an interesting point you make, because I guess the banks as such would probably not prompt their clients to review their loans on a regular basis, would you say? They tend to sort of just set and forget, whereas the broker would spend more time in reviewing?
Well, clearly the focus of a good broker is to do that. It's not just to have a client today and see you later. Yeah. It's to have a client for life, I suppose. For life. And the broker's going to be always there. The person in the bank will change. They'll move on elsewhere. Absolutely. So if you're looking for a relationship with a professional who understands your needs and requirements, and you can rely on to ring up at any time and say, hey, listen, I've heard something about interest rates going up, or fixed rates and variable rates, what should I do? You've got that person who knows your circumstances and will assist you based on their knowledge of your circumstances.
Perfect. Phil, another thing I guess that I get a lot of inquiries about, my clients sometimes ask me, they may be with a lender at the moment, and it can be a little bit cumbersome for them to change their loan provider. There's a lot of red tape involved. Sometimes there's enormous costs. What advice, I guess, would you give those sort of clients? I mean, and I know you're saying that they need to work with a broker, but is there anything in place that can help clients now to make that transition easier?
Well, the government's just introduced this ban on exit fees, which on the face of it is intended to enable people to switch loans more easily. I guess it's yet to be seen, how that works out. But
is that in place currently?
That started from the 1st of July. So any loan written after the 1st of July, you can't have an exit fee, but for loans that are written before then, exit fees can still apply. I think that there's probably been a bit of an exaggeration of the difficulty of changing lenders. If you look at the statistics over the last decade or so, around about 30% of loans every year are refinances to another lender, so people do change loans. Exit fees usually only apply in the first couple of years of the loan. But again, a broker will be able to advise you that, well, maybe we can get round this by you just waiting for a few more months until the period's over, and then we'll go for a loan either with that current lender or with a different lender, because you don't, in order to improve your finance, you don't necessarily have to change lenders. Sometimes it's just the broker on your behalf going back to the lender and putting the circumstances, and the lender doesn't want to lose you as a client,
so
mostly.
It's pretty much fighting on behalf of the consumer.
Absolutely.
To get the best deal. It doesn't matter where they go.
The broker's role is to act in the consumer's interest. So the broker's not acting in the bank's interest. The broker's acting in the consumer's interest. So if they can, in doing the best thing for you in terms of what's appropriate as circumstances change, if they can convince the current lender to change the loan or drop the interest rate or whatever, that's their role, and that saves the hassles of exit fees and so forth.
Fantastic.
Yeah.
Sounds great.
Look, and that happens all the time.
Yep.
Yeah, that's what they do. That's what a good broker does.
Yep.